Zambia is drowning in a $14 billion debt crisis. But this is not just about unpaid loans. It's about a silent war between China, the West, and Zambia's own leaders. How did Edgar Lungu's secret deals open the door for Beijing? Why is President Hakainde Hichilema now caught between Washington's pressure and China's grip? And most importantly, what does this mean for the future of Africa's independence? This story is about debt, power, and betrayal. Stay with me, because by the end of this video you'll understand why Zambia has suddenly become the battleground of the world superpower. Zambia is facing a $14 billion debt crisis. A crisis so deep that it's no longer just about money. It's about power, control, and Africa's independence. From Edgar Lungu's controversial loans, to Hakainde Hichilema's desperate search for solutions, and China's billion-dollar influence, all the way to Washington and London's hidden hand. Tonight, we ask, who really owns Zambia's future? And how did Africa's copper giant fall into Washington's crosshairs? Zambia is drowning in $14 billion debt, but this crisis is bigger than just numbers. Backhand index pointing right. How did Edgar Lungu's government pile up loans? Backhand index pointing right. Why is Hakainde Hichilema (HH) now struggling to fix it? Backhand index pointing right. And what role do China, Washington, and London play in shaping Zambia's economic future? This documentary-style analysis reveals how Zambia's debt is more than an economic problem. It's a global power struggle. From China's loans to IMF conditions, and from Lungu's past deals to HH's political battles, we uncover the truth about Africa's financial independence. Subscribe to InspirAfrica Official for more breaking news, African politics, and global revelations. Zambia's debt in the headlines. Zambia's debt crisis has captured significant attention in recent years, both domestically and internationally, as the country grapples with a financial burden that threatens its economic stability and sovereignty. By 2020, Zambia became the first African nation to default on its sovereign debt during the COVID-19 pandemic, marking a pivotal moment in its economic history. The crisis, characterized by a debt stock estimated at over $14 billion by 2021, has placed Zambia at the center of global discussions about debt sustainability, geopolitical influence, and economic recovery in Africa. Headlines have focused on the country's struggles to service its external debts, particularly to private creditors and bilateral lenders like China, as well as the interventions of multilateral institutions such as the International Monetary Fund (IMF). This section explores why Zambia's debt crisis has become a focal point, examining the economic, political, and social factors that have propelled it into the global spotlight. Zambia's economy has historically been reliant on copper mining, which accounts for approximately 70% of its export revenue. Fluctuations in global copper prices have made the country vulnerable to external shocks, a factor that has exacerbated its debt challenges. During the 2000s, Zambia benefited from debt relief under the Heavily Indebted Poor Countries (HIPC) initiative, which reduced its external debt from $7.3 billion in 2000 to approximately $1.8 billion by 2006. However, subsequent borrowing, particularly under the administration of former President Edgar Lungu (2015 to 2021), led to a rapid accumulation of debt driven by infrastructure projects and Eurobond issuances. By 2020, Zambia's external debt had ballooned to $12.7 billion, with total public debt exceeding $14 billion, equivalent to over 120% of GDP. The crisis gained prominence due to several factors. First, Zambia's default on a $42.5 million Eurobond payment in November 2020 signaled its inability to meet obligations, raising concerns among creditors and investors. Second, the involvement of China as a major creditor, holding approximately 30% of Zambia's external debt, has fueled debates about debt trap diplomacy and China's growing influence in Africa. Third, the IMF's involvement, alongside pressure from Western capitals like Washington and London, has highlighted tensions between multilateral financial governance and national sovereignty. These dynamics have made Zambia's debt crisis a case study in global economic relations, with implications for other African nations facing similar challenges. Public sentiment, as reflected in discussions on platforms like X, underscores the urgency of the situation. Zambians and international observers have expressed concerns about rising living costs, currency depreciation. The Zambian kwacha lost over 50% of its value against the dollar between 2015 and 2021, and the government's ability to deliver basic services amidst debt repayments. The crisis has also sparked debates about governance, transparency, and the role of external actors in shaping Zambia's economic policies. As Zambia navigates this complex landscape, the question of how it can achieve sustainable growth while maintaining autonomy remains critical. Edgar Lungu's role in the $14 billion crisis. When Edgar Lungu took power, Zambia was already struggling with high debt, but under his rule, borrowing skyrocketed. Roads, bridges, and stadiums were built, many funded by Chinese loans. Lungu defended the borrowing, saying Zambia was investing in development. But critics accused him of mortgaging Zambia's future to Beijing. By the time he left office in 2021, Zambia owed more than $14 billion, much of it to China, private lenders, and the IMF. For many, this was Lungu's most controversial legacy. Edgar Lungu's presidency, 2015 to 2021, is often cited as a key period in the escalation of Zambia's debt crisis. crisis. His administration's economic policies, particularly its aggressive borrowing to finance infrastructure projects, have been scrutinized for contributing to the country's financial distress. This section examines Lungu's role, analyzing the decisions made during his tenure, their economic impact, and the criticisms leveled against his government. Lungu inherited an economy already facing challenges due to declining copper prices and fiscal deficits. However, his administration pursued an ambitious infrastructure development agenda, including roads, airports, schools, and hospitals, aimed at modernizing Zambia and stimulating growth. To finance these projects, the government turned to both bilateral lenders, notably China, and international capital markets through Eurobond issuances. Between 2012 and 2015, Zambia issued 3 Eurobonds totaling $3 billion, with interest rates ranging from 5.4% to 8.97%. These bonds, combined with bilateral loans, significantly increased Zambia's debt stock. China's role as a creditor was particularly prominent during Lungu's tenure. Loans from Chinese entities, such as the Export-Import Bank of China, financed major projects like the Lusaka-Ndola dual carriageway and the Kenneth Kaunda International Airport expansion. By 2020, Zambia owed approximately $3.5 billion to Chinese creditors, representing about 27% of its external debt. Critics argue that these loans, often opaque in their terms, carried high interest rates and short repayment periods, straining Zambia's fiscal capacity. The lack of transparency in these deals fueled allegations of corruption and mismanagement, with some suggesting that funds were misallocated or siphoned off by political elites. Lungu's government also faced criticism for its handling of domestic revenue. Despite increased borrowing, tax collection remained inefficient, and public spending was often directed toward politically motivated projects rather than sustainable investments. For example, the expansion of social cash transfer programs and subsidies, while popular, added pressure to the budget. By 2019, Zambia's debt service obligations consumed over 40% of government revenue, leaving little room for social services or economic diversification. Defenders of Lungu argue that his infrastructure investments were necessary to address Zambia's development deficits and that global economic conditions, such as low copper prices, were beyond his control. They also point out that the debt crisis was a cumulative result of policies predating his administration. However, critics contend that the scale and pace of borrowing, coupled with inadequate fiscal discipline, exacerbated vulnerabilities. The 2020 default, which occurred under Lungu's watch, cemented perceptions of mismanagement as the government failed to secure a restructuring agreement with creditors before defaulting. Public discourse on X and other platforms reflects polarized views. Some Zambians view Lungu's policies as reckless, accusing him of prioritizing political survival over economic prudence. Others believe he was scapegoated for structural issues inherent in Zambia's resource-dependent economy. Regardless, Lungu's legacy is intertwined with the debt crisis, and his administration's decisions continue to shape Zambia's economic challenges. How Hichilema (HH) is handling the fallout. In 2021, Hakainde Hichilema, or HH, promised to fix the crisis. He told voters he would rescue Zambia from debt, bring jobs, and restore investor confidence. But reality struck fast. The economy was weaker than expected, and repayments were looming. HH turned to the International Monetary Fund and Western lenders. His critics say HH became too close to Washington and London, accepting tough conditions, including higher taxes, subsidy cuts, and painful reforms. Supporters argue he had no choice. Zambia was already drowning. Hakainde Hichilema, popularly known as HH, assumed the presidency in August 2021 following a landslide victory over Lungu. His administration inherited a dire economic situation, with Zambia in default, foreign reserves critically low, and public discontent high. This section evaluates Hichilema's approach to managing the debt crisis, focusing on his economic reforms, debt restructuring efforts, and challenges in balancing domestic priorities with creditor demands. Hichilema campaigned on a platform of economic recovery, transparency, and anti-corruption. Upon taking office, his government prioritized securing an IMF bailout to stabilize the economy and restore investor confidence. In December 2022, Zambia secured a $1.3 billion extended credit facility (ECF) from the IMF, conditional on implementing fiscal reforms, improving governance, and restructuring its external debt. This marked a significant step, as the IMF program unlocked additional funding from multilateral lenders like the World Bank and provided a framework for debt negotiations. Debt restructuring has been a cornerstone of Hichilema's strategy. Zambia's participation in the G20's Common Framework for Debt Treatments Beyond the Debt Service Suspension Initiative (DSSI) aimed to coordinate debt relief among bilateral creditors, including China and Western nations. In June 2023, Zambia reached a landmark agreement to restructure $6.3 billion in bilateral debt, with China and France co-chairing the creditor committee. This deal extended repayment periods and reduced interest rates, providing Zambia with fiscal breathing room. However, negotiations with private creditors, particularly Eurobond holders, have been more contentious, with delays due to disagreements over debt haircuts and repayment terms. Hichilema's domestic reforms have focused on fiscal consolidation and economic diversification. His government has reduced subsidies on fuel and electricity, moves aimed at aligning prices with market realities, but which have sparked public discontent due to rising living costs. The kwacha's volatility, though somewhat stabilized by 2025, remains a challenge, with inflation averaging 10 to 12% annually. To diversify the economy, Hichilema has promoted agriculture and renewable energy, seeking to reduce reliance on copper. Initiatives like the revival of the Mopani copper mines through partnerships with foreign investors reflect efforts to boost mining efficiency while attracting capital. Despite these efforts, Hichilema faces significant challenges. Public expectations for rapid economic improvement are high, and austerity measures have led to protests, particularly among urban populations affected by price hikes. Corruption allegations from the Lungu era continue to complicate governance, with Hichilema's anti-corruption drive facing accusations of selective targeting. Moreover, coordinating with diverse creditors, China, Western governments, and private bondholders requires delicate diplomacy to avoid alienating key partners. Sentiment on X suggests mixed perceptions of Hichilema's leadership. Supporters praise his pragmatic approach and success in securing IMF support, viewing him as a stabilizing force. Critics, however, argue that his reliance on Western institutions risks compromising Zambia's sovereignty and that austerity measures disproportionately harm the poor. Hichilema's ability to balance these pressures while delivering tangible results will define his legacy in addressing the debt crisis. China's debt trap, or Lifeline. China has become Zambia's largest creditor, funding highways, airports, and power stations. But critics call this a debt trap diplomacy strategy, where loans create dependency and Beijing gains leverage. For Zambia, China is both lifeline and burden. Without Chinese funding, many projects would not exist. But with it, Zambia's sovereignty is at risk. Is China helping Zambia rise, or slowly taking control? China's role in Zambia's debt crisis has been a contentious issue, with narratives oscillating between accusations of a debt trap and portrayals of China as a vital development partner. This section critically examines China's involvement, assessing whether its loans constitute a trap or a lifeline for Zambia's economy. China emerged as a major creditor to Zambia during the 2000s as part of its Broader Belt and Road Initiative (BRI). By 2020, Zambia owed approximately $3.5 billion to Chinese lenders, including state-owned banks and companies like China Non-Ferrous Metal Mining Corporation. These loans financed critical infrastructure, such as roads, power plants, and airports, addressing Zambia's chronic underinvestment in public goods. For example, the Tazara Railway, originally built with Chinese support in the 1970s, and more recent projects like the Kafue Gorge Lower Hydropower Station demonstrate China's long-standing role as a partner in Zambia's development. Proponents of the Lifeline narrative argue that Chinese loans filled a gap left by Western lenders, who are often reluctant to finance infrastructure in high-risk markets like Zambia. Unlike IMF or World Bank loans, Chinese financing typically comes with fewer policy conditions, allowing greater flexibility for recipient governments. Additionally, China's focus on infrastructure aligns with Zambia's need to improve connectivity and energy access, which are critical for economic growth. The restructuring of Chinese loans under the G20 Common Framework in 2023 further suggests a willingness to cooperate on debt relief, countering claims of predatory lending. However, the debt trap narrative has gained traction, particularly in Western media and policy circles. Critics argue that China's loans, often secured against natural resources or state assets, create unsustainable debt burdens. The opacity of loan agreements, coupled with high interest rates averaging 5 to 7% compared to 1 to 2% for multilateral loans, has raised concerns about Zambia's ability to repay. Allegations of asset seizure risks, such as the rumored takeover of Zesco, Zambia's state-owned power company, have fueled fears of Chinese control over strategic assets, though no concrete evidence supports such claims. The term debt trap diplomacy implies a deliberate strategy to ensnare countries in debt for geopolitical leverage, a charge China denies. A balanced perspective suggests that China's role is neither purely exploitative nor entirely benevolent. Zambia's borrowing decisions were driven by domestic priorities, and Chinese loans were accepted willingly to meet those needs. However, the lack of transparency and weak governance under Lungu's administration exacerbated vulnerabilities, making Zambia reliant on Chinese financing. The restructuring process has shown that China is willing to negotiate, but its influence as a creditor gives it significant leverage in Zambia's economic affairs. Discussions on X reflect polarized views, with some users accusing China of neo-colonialism and others defending its role as a partner free of Western-style conditionality. The truth likely lies in a complex interplay of mutual interests, with Zambia's agency and governance playing a critical role in shaping outcomes. Washington and London step in. IMF pressure explained. Washington and London see Zambia's debt crisis as more than economics, it's geopolitics. For the US and UK, Africa is now a battleground with China. By pushing Zambia to restructure its debt through the IMF, Western powers gain influence. The message is clear. If China builds the roads, the West controls the rules. And so Zambia, a nation of just 20 million, finds itself at the center of a global tug of war. The involvement of Washington and London, primarily through the IMF and bilateral support has been a significant factor in Zambia's debt crisis response. This section explores the role of Western powers, the IMF's influence, and the pressures associated with their intervention. The IMF's $1.3 billion ECF, approved in 2022, was a lifeline for Zambia, providing immediate financial relief and signaling to creditors and investors that the country was committed to reform. The program required Zambia to implement austerity measures, including reducing subsidies, improving tax collection, and enhancing public financial management. Washington and London, as major IMF shareholders, have supported this approach, viewing Zambia as a test case for debt restructuring under the G20 Common Framework. The IMF's involvement comes with significant conditions, often described as pressure by critics. These include fiscal discipline, privatization of state-owned enterprises, and liberalization of markets, policies that align with Western economic orthodoxy. For example, the push to restructure state-owned enterprises like ZESCO and Zambia Railways has raised concerns about job losses and foreign control of strategic assets. The IMF's emphasis on transparency has also led to audits of Zambia's debt, revealing discrepancies in previous loan agreements, particularly with Chinese creditors. Washington and London's influence extends beyond the IMF. The United States and United Kingdom have provided technical assistance and debt relief advocacy, positioning themselves as counterweights to China's growing presence in Africa. The U.S. has emphasized its Partnership for Global Infrastructure and Investment (PGII) as an alternative to China's BRI, while the UK has leveraged its historical ties with Zambia to promote governance reforms. However, these interventions are not without controversy. Critics argue that IMF conditions prioritize creditor interests over Zambia's developmental needs, perpetuating a cycle of dependency on Western institutions. On X, opinions vary widely. Some view Western involvement as essential for stabilizing Zambia's economy, citing the IMF's role in unlocking multilateral funding. Others see it as an extension of neo-colonialism, accusing Washington and London of using the IMF to impose policies that undermine Zambia's sovereignty. The tension between Western and Chinese influence underscores the geopolitical stakes of Zambia's debt crisis, with the country caught between competing global powers. What this means for Zambia's future and Africa's independence. While governments and global powers fight, it is ordinary Zambians who pay the price. Food prices rise, fuel costs soar, and unemployment grows. The debt crisis is not just numbers in a report, it is hunger in homes and anger in the streets. And many ask, did Edgar Lungu sell Zambia's future? Or is HH now sacrificing sovereignty for survival? Zambia's debt crisis has far-reaching implications for its economic future and the broader question of Africa's independence in a globalized world. This section assesses the potential trajectories for Zambia and the lessons for other African nations. For Zambia, the immediate priority is achieving debt sustainability while fostering inclusive growth. The IMF program and debt restructuring agreements provide a framework for fiscal stability, but their success depends on effective implementation. Hichilema's diversification efforts, particularly in agriculture and renewable energy, could reduce reliance on copper and create jobs, but these initiatives require long-term investment and political stability. The risk of social unrest, driven by austerity and inequality, remains a significant challenge, as does the need to balance creditor demands with domestic priorities. The crisis also raises questions about Zambia's sovereignty. Heavy reliance on external financing, whether from China, the IMF, or private creditors, limits policy autonomy. The restructuring process has exposed tensions between creditors, with China and Western powers vying for influence. Zambia's ability to navigate these dynamics while asserting its interests will determine its economic independence. For Africa, Zambia's experience is a cautionary tale. Many African countries, such as Kenya, Ghana, and Ethiopia, face similar debt challenges, with external debt levels rising across the continent. The G20 Common Framework, while innovative, has been criticized for its slow pace and limited scope, highlighting the need for more robust global mechanisms to address debt distress. The debate over China's role also underscores the importance of transparency and governance in managing foreign loans. African nations must strengthen domestic institutions, diversify economies, and negotiate favorable terms to avoid repeating Zambia's trajectory. The broader question of Africa's independence hinges on reducing dependency on external actors. This requires building resilient economies, investing in human capital, and fostering regional cooperation through institutions like the African Union. Zambia's crisis illustrates the challenges of achieving these goals in a world dominated by global powers with competing agendas. Conclusion: who really controls Zambia's destiny? In the end, the $14 billion question remains: who owns Zambia? The leaders, the people, or the global powers pulling the strings? One thing is certain: Zambia's debt is not just about money. It is about power, sovereignty, and the future of Africa itself. The question of who controls Zambia's destiny encapsulates the interplay of domestic agency, creditor influence, and geopolitical dynamics. While Zambia's government, led by Hichilema, holds formal authority, its decisions are constrained by the realities of debt dependency. China, as a major creditor, wields significant leverage, as do Western powers through the IMF and bilateral engagements. Private creditors, particularly Eurobond holders, further complicate the landscape, prioritizing financial returns over developmental goals. Ultimately, Zambia's destiny lies in its ability to assert agency within these constraints. Transparent governance, prudent fiscal management, and strategic investments in diversification can empower Zambia to chart its own path. However, the broader structural issues, global commodity dependence, unequal lending practices, and geopolitical rivalries, require collective action at the African and international levels. The voices on X reflect a shared aspiration for Zambia to reclaim control over its future, whether through rejecting external impositions or embracing pragmatic partnerships. The path forward demands a delicate balance, leveraging international support without surrendering sovereignty and addressing immediate crises while building a foundation for long-term prosperity.